Hey everybody, welcome back to Raven's Recaps, Insurance, Game of Chance. Before we get started on insurance, I'm on a road trip and I'm in Wetaskiwin. This content is produced on traditional territories in Alberta of the many First Nations, Métis, and Inuit whose footsteps have marked these lands for centuries. What if we compare insurance to gambling? Your premiums are your wager or your bet on yourself that your trucks and your drivers are not going to screw up. The insurance company, or the house, takes that bet hoping you are correct. If the insurance company is wrong, the house has to pay out to the maximum your bet or premium covered. Insurance companies use information provided by actuaries to decide how much your minimum bet or premium should be. Actuaries are the odds makers and the insurance brokers are the bookies. The brokers or bookies take a cut to facilitate the relationship between the trucking company and the insurance company. Now this is the gamble part. The actuaries or odds makers are only as good as the information they use. What if that information is not reliable? It means that the predictions or odds given by the bookmakers or actuaries are flawed. This can cause a few things to happen. 1. The odds may not accurately reflect the likelihood of an event occurring or the probability of a particular outcome. 2. Unfair advantage. If the information used to set the odds is bad, it can give an unfair advantage to insurance companies who have access to better odds or better information. Number 3, increased risk. Bad information increases the overall risk for everyone. Actuaries may allow for odds that are not reflective of the actual risk. This leaves insurance companies vulnerable to paying out claims for companies that would not be insurable if the odds were correct. Actuaries account for small discrepancies when calculating risk, which is why overall premiums go up for everyone yearly. But what if the small discrepancies over time caused a glitch in the matrix? Insurance companies don't just eat those losses. It is passed on to policyholders as big increases, so we all pay the price. In Vegas, what do you think happens to odds makers with unreliable data? First, I have nothing against insurance companies. I think insurance companies are up against it every time a commercial vehicle policy is written. Insurance claims can be extraordinary in terms of damage amounts, and never forget the loss of real human life and injury. There are basically two kinds of insurance, public and private. Public insurance is regulated and managed by the government. The advantage is, if you are hard to insure, as long as you can afford the premiums, it's hard for a publicly funded enterprise to deny a resident. I'm not saying it doesn't happen, but not that often. Most, if not all, public insurance is no fault and has limits to what compensation is paid out for injuries. That is why there are fewer accident lawyers in Manitoba compared to Alberta. No fault basically has a set amount for damages per incident. If you lose a limb or your eyesight due to an accident, it is worth a set amount. If you have a special circumstance and need more compensation, you have to sue. An advantage to public insurance is that if you are in an accident with an uninsured driver, your public insurance will kick in way faster than private third-party insurance. In Alberta, we have private insurance, which is sort of regulated. Those regulations are more about just having insurance and the minimums, but essentially the relationship is between you and the insurance company. This also means if you have a terrible accident record, a private insurance company has the right to not accept you as a client. Insurance companies make money by taking in more premium payments and paying out less claims. Insurance profits can balloon if there are less accidents than usual, like during COVID when nobody was driving and people started questioning why the premiums didn't go down. With public insurance, some profits get paid back to policyholders as rebates once in a while, but not usually commercial customers. Private insurance profits go to the shareholders of the insurance company. In order to make money, the insurance company's job is to not pay your claim by finding things that will limit liability. There are so many things an insurance company can use against a carrier to deny a claim. Remember, when you pay your premiums, you are a customer, and when you are asking for money, you are no longer a customer but a payable. Nobody wants to pay bills, and insurance companies are no different, but now you're the bill. If you are or own and operate a commercial vehicle, it is in your best interest to understand your policy and the limits. Does your insurance company have specific policies that need to be in your safety and maintenance program? Did you just check the box and say yes on your application for insurance, but you don't know for sure? Think about the three things that can go wrong: driver, truck, and trailer. Now think about each thing as a separate liability. Driver. Is the driver file complete and up to date? Are the hours of service monitored and free of violations? Truck. Do you have a complete vehicle file? Do you have a vehicle maintenance records that meet the intervals you stated in your maintenance program? Can you prove your retorques every time the wheels had maintenance or repairs? If you have a wheel-off incident, you better hope your affairs are in order. If you have a wheel-off incident that causes injury or worse, proper records may be the difference between the carrier paying out a huge claim or the insurance company paying out that claim. Trailers, same as truck, but trailers are usually the most neglected and least documented. Are you pulling your own trailers or somebody else's? If it's not your equipment, what have you done to mitigate risk and limit the liability? If wheels fly off a trailer, but it's not your equipment, just saying it's not mine won't cut it. With insurance claims payouts going through the roof, insurance companies are going to start requiring way better documentation to prove compliance to the regulations. Last thing, if you are in an accident and the other party does not have insurance, do not call the government. Nobody will help you. This is what you pay third-party liability insurance for, to cover you if you are injured and the other person has no insurance. Make a claim against your third-party insurance and let the two insurance companies fight it out. You pay premiums, you're entitled to the benefit when you need it. That's about it for insurance. If you have any questions or comments, check out my socials or my website at www.therodsgod.ca. Bye!